Josh and I just here to go over we had a Chinese version last week. Now this is the English version. We're going to talk about the investment project, upcoming investment opportunity we have. So you all know me already, so I'm going to skip myself. How about Josh? Why don't you give everybody an introduction of yourself?
Okay, so Rob already know me. So Elizabeth, my name is Josh, and I'm a financial analyst at Real International. I'm a CFA level 3 candidate.
Yeah. So Josh is our number guy. He does all the pro forma analysis and
Yeah.
do the deal analysis. A lot of our deal we open to accredited investors. Today we're going to go through quickly about U.S. economic forecast, real estate market updates, and also the project we're working on. And we're going to talk about the investment opportunity we have at this point in time. Feel free to stop us. We have a small group of this discussion today, so just feel free to stop me wherever we go along. About the U.S. update, I think one of the data I want to show is consumer confidence. This is really an indicator of the economy at this point. The U.S. Consumer confidence, actually, if you look at right now, is even above where we are 2008. So people are still hopeful or very positive about where the economy is heading to. And the jobless claim actually dropped significantly. Dropped to, you can tell the number dropped significantly ever after the peak time of May and June, April. The highest employment rate in June was 11.1%, and now it's dropping. You also can see we talk about the home purchase, right? If you look at the mortgage application rate, what we have this year actually increased by 19% compared to last year. This is a lot of people, if you don't put a number in mind, people don't really relate, thought we have an economy breakdown and people not buying home. Actually, it's the opposite. Austin market, I'm sure you heard about Tesla, Amazon, all that. So driving all the demand. And now you can see for just the July data. July, the median home price of 12%. Look at them, it's about 350 now. The average sales price also went up. Pay attention to the inventory. It's only 1.9%, 1.9 months of inventory. So really no home out there. So higher price, house sell quicker, and a really tight supply and demand. So now I'm getting through, I think just summarize before we get into all the status update, let's talk about what we've been doing so far. For all the years, the investment project we executed, undergoing about 20 of those. The average annual return is about 10 to 18%. We deploy about 50 million equity. I would say this year we deploy about 10 million already. So our investment strategy involve a lot of due diligence, upfront due diligence, the deal flow analysis, and really launch the project, and also the follow-up through the investment. So our approach, if we can separate it, three main categories. One is a traditional buy and hold type of a cash flow strategy. People buy rental property or commercial property and hold. That's the core opportunities. The cash flows is not great, but the risk definitely is lower. The second category are the ones that instead of you managing the property, we will use a capital to be a lender, lend the money to the developer, or we have a tax lien project, which is I would say tax lien projects are a core opportunity, but lending to developer. Okay, so this is you get a stabilized return, a fixed income return. The other opportunity, of course, higher risk, but it's more of an equity investment. We have some project. I'm going to go through some of the example to show you what is what. Okay. So let's get through the project we completed so far. Last year, we had 4 projects completed. The first one is a downtown, like close to infill Austin. We buy a lot, tear it down, and build a home and sell it. So this is called infill development build project. We finished 8 homes. We sold them all. Really good investment. The other two, one is Trail at Lake Houston, Oak at Westlake. And those are the apartment value add. Those two apartment was sold last year. Investor also getting a fixed annual return. And this one is a unique opportunity. It's also exited last year, was Terravella project. It's a value apartment. The project was successful, exited by refinancing the project. We had a Class A investor, Class B investor. Class A was able to get 10% annual return. Class B able to enjoy the back end profit sharing. So about 1.7, right? 1.8 multiple.
Yeah, it's about 1.7.
1.7 multiple. Yeah. So,
Very good project.
yeah, great project. Also, we have several other projects exiting soon this year. Of course, two of them are the same type as a single-family rental development, Big Cave and Walden. Based on the PSA, which is the executed contract, we're exiting. We are closing on early of October. So great project. I think it's one of the home run project too. So far under COVID, believe it or not, on Bee Cave, which are YOQ, our rent collection is about 100%. 100% tenant paying rent. This is amazing because the quality of the tenant is really high up there. And Walden is a similar project. We also closing early October, October 11th. So we're looking forward to that. The Dallas Newport project, also a value add apartment. We are in the phases of exiting. This is a great return as well. Dallas market is pretty good. So just so you know, this project at this point in time is running really good. The average IRR is about over 30% right now. So I'm going to get through some of the existing investment opportunities. The ones I separate them as the two. One is under construction with a new ground up build, and the other one is a value add, existing operation project. For our ground up development, we have this hotel conversion project. I think some of you might already heard that. It's we call Hedge One. This is we buy a hotel that is not operational right now. Under COVID, there's lots of hotels there is not operational at all. So we purchased them, renovated, turn them into apartment. Now you look at the picture, right? The before after, great amount of work coming in to the beautiful design, makes the unit is modernized.
And
you can see,
more than 30 units have been already pre-leased.
Yeah. Yes, yeah, Josh is right. So so strategy is do the renovation and lease it for pre-lease. Yeah, Josh is right. So you visited that property before, right, Josh? How do you feel?
I'm just feeling like right now it's just a whole different world over there. Do you still remember the first time when we were there? The hotel was rolling a shitty condition. Yeah.
Yeah. Now, if you look at this, they definitely did fantastic work renovated. 100% unit when we put on the market pre-leased. So this one, I'm sure you hear.
I would have loved to got into that one too.
Huh?
I would have loved to have got into that.
Oh yeah. So we have our Hedge 2 right now going. So this is our Nartiva project, the one we built downtown Austin on Rainy Street. This is like a hotel condo project we invested. Again, it's a private equity deal. Right now, it's the construction is starting. You can tell from the picture they are building like one floor a week. So, and oh, I'm sure Bob really knows this project well. It's a ground up development of the apartment near downtown Austin called MLK Development. This project, right, Josh? This is probably doing really well at this point. The number looks good. How about the rent? I think the rent is good too.
Yeah, the rent. So I would like to present two data for you guys. So one is the cap rate. The cap rate in that area when we started the construction is around 5.2%. And right now the average cap rate over that area is lower than 5%, is around 4.9%. So you guys probably, some of you are like Rob, you are familiar with commercial properties. The lower the cap rate, the higher the market price. And
Right.
another data is the rent. So the average market rent in that area increased to 3.6% in 2019 than
Right.
2018. Yeah.
Oh.
Well, that's going to be the developer spread is the difference between the starting cap rate and the ending cap rate.
Well, investor also enjoy that too because
True.
yeah.
But when, I don't know if they've been updating their finish dates, their key milestones on when they expect to start leasing. Have they updated that?
I
They
believe so. Yeah, go ahead.
uh, so this project is expected to finish the construction in the third quarter next year, 2021.
Okay.
Yeah.
Actually, if you look at those apartments, they offer a very like affordable units, right? So the rent there compared to infill Austin, the rent is really affordable. It's good for. We're gonna have a long waiting list for the affordable units, basically. And we
Yeah.
have a good finance put in place, the hot loan put in place, and no property tax on the property. So cash flow would be great.
Yeah.
This one's interesting. This is our, this is what I call when we say the three type of investment, right? Buy and hold type. And the second one is a lender. We become a lender, lend the money to developer. This is the second type, loan type, fixed return. This is the community where it's an hour north of Dallas called Greenville, Texas. Larry is a local builder. He owns a majority of the open land over there. He never go to the money to go to the bank raise a fund. He always go to the private investor. So we put together private equity and lend the money to him to build the horizontal infrastructure. Then once the horizontal is finished, like this community called Stonewood Estate Community has 296 lots. We found the entire infrastructure. So investors have been getting a really nice average 8% annual returns. In there, he used the land as the collateral, guaranteed the loan. We also, exciting news is we also have the opportunity to be able to purchase the home at the investment home at the reduced price, market price. So in the front end, your capital going in there will earn all the interest, the income. In the back end, we allow the investor to purchase the investment property at a great discount. So lots of our investors actually are long-term hold investors. So this is a great opportunity. I think we are working on the number. Larry's going to come to Austin next week. We're going to talk to him, finalize all the deal, the numbers. So once we're ready, we will present that to our investor. Okay. Really exciting news, right, Josh?
And I also want to make a comparison between this project and the Mueller. I think one of the advantages of this one is the holding period for this one is much shorter. It's only within 1 year. So within 1 year, you can get an opportunity to purchase to purchase the house at a deducted price.
Yeah. This is our infill development project, similar to the one we finished last year. This type of property is, we actually been doing that since 2013. We go to infill location, we buy a piece of land like this one on the top. We have 5 acres on half land we're building houses on. And also we go to the community to build individual homes. So those are we've been doing that quite well. And we're gonna continue to do that at an ongoing basis. So let's talk about the one that we talked before was all the ground up development, right? So now let's talk about operational. This is the Perry Hotel, close to Red River, right? Close to Hancock Center and also UT. This is the one of the EB5 project we started years ago, about, I think it's 2006. The hotel is in full operation right now. The private membership also almost sold out. The investor going to start getting a cash flow probably coming year. This is one of the nicest boutique hotel. Welcome you go there. It's going to be a good destination for local to visit too. Nice restaurant and a really good venue for event as well. This is one of the historical building. Perry family used to live there, so called Perry Commodore. They changed that to a boutique hotel. This is the one of the value-add apartment we have in San Antonio. This one performing really well. So under the circumstance right now, we structured this to a middle layer mass loan. That's why we have really got protected from the economy fluctuation. This one is one of the Houston project. Bob, probably familiar with this one. For now, we had a challenge initially, had this apartment being performing. But right now, the good news is we work with a nonprofit organization, able to make affordable units. Because of that, we're allowed to save the property tax. So basically for this project, we don't have to pay property tax, save $1 million a year. Hopefully
in the future 10 years.
In the future 10 years.
Yeah,
so the number gonna immediately gonna look better, right? We're looking at starting getting a nice cash flow starting October. So this is gonna turn the project around really nicely. Oh, Austin people are familiar with this one. It's a Westwood apartment in the front of Westwood High School. That one's doing really well, Josh. Why don't you tell people how folks how this one's performing right now under COVID?
Okay, so during the 2020 first quarter, so the gross rent revenue of the property arrived the highest point since we acquired this property in 2017. And the operating expenses has been decreased to the lowest point since we acquired this property. So this property is operating and managing super good right now.
Yeah. So this is one of the nice, like we said, value add opportunity we're doing. Hopefully once we're looking at refinancing either this year or next year, we're looking at exiting in a year or so. You can see nice work done there. Also, I think some of you follow us, you know, we started the tax lien project beginning, I would say back in May or June. How that work is, I think I told you at the beginning of the year, we're gonna do a $5 million funds. Say, okay, well, we don't want to put all the egg in one basket. We're gonna put 1/3 of the fund, the $5 million, to a tax lien, which is a really safe, secure type of return, right? About 8 to 10% annual return. The middle layer, we're gonna put it into 1/3 of the capital into the value apartment. The annual return will be 10 to 18 hours. And then we put a very high risk one into our last bucket, which is ground up development, right? You see about 15 to 20, over 20 IRRs. After COVID started, we go, oh, we need to mitigate our risk. So we actually turned the $5 million into a property tax lien funds. Very safe, secure, but of course the return are lower than lots of people expected. It's about 8 to 10% annual. So we started the deployment ever since June. We do different tranches. The first tranche we deployed in June. Here's the good news, okay? The first tranche we deployed 4.4 million total. Number loan originated about 261. The annualized yield weighted average return is about 12.3%. So investors been getting cash flow distribution now, really exciting. So we are working on our third tranches right now this month. We hope to deploy about 1.5 million by September 1st. Glad we're able to meet that target. So this is the other one. I summarize. We exited a full project, returned about $8 million equity last year, and this year we have about 2 or 3 projects in the process of exiting. Then we have 3 or 4 of those ground out development. Then we have several value add. So now I'm going to turn over to Josh. He can tell you about some of the new opportunity we're working on.